Supermicro Computer stock is on the brink of a potential rebound after a significant drop. In today's video, we're diving deep into the factors influencing SMCI's current market position, its recent financial performance, and the impact of a controversial report from Hindenburg Research. Stick around for an intriguing bonus topic at the end. Supermicro Computer, or SMCI, recently experienced a dramatic 55% drop in its stock price after reaching an all-time high of $1,200 per share. This decline was mainly driven by concerns over the company's valuation following its latest earnings report. However, there's more to this story, and we're here to uncover it. In Q4 2024, Supermicro reported a record-breaking revenue of $5.31 billion. This represents a staggering 143% increase year-over-year and a 38% growth from the previous quarter. Such impressive performance highlights the company's capacity to generate accelerated revenue, particularly in the booming AI sector. Supermicro's pivotal role in AI infrastructure has been a significant growth driver. The company's leadership in AI hardware makes it a compelling long-term investment. But it's not all smooth sailing. Hindenburg Research recently published a report raising serious concerns about SMCI's financial transparency. Hindenburg Research pointed out several issues, including accounting irregularities and channel stuffing. These practices can inflate sales figures and undermine financial transparency, raising red flags for investors. For instance, Supermicro was delisted from Nasdaq in August 2018 after failing to file financial statements for 2 years. Although the company regained compliance by January 2020, the SEC later charged it with accounting violations. According to the SEC, Supermicro prematurely recognized over $200 million in revenue between 2015 and 2017. This practice, known as channel stuffing, involves recognizing revenue before product delivery and altering shipment terms to inflate sales figures. Supermicro settled with the SEC, paying a $17.5 million fine, and CEO Charles Liang reimbursed $2.1 million. However, the company's decision to rehire executives involved in the misconduct has raised concerns about its commitment to corporate governance. So, what does all this mean for investors? Despite the controversies, SMCI's technical analysis suggests that the stock is nearing oversold conditions. With a relative strength index, or RSI, of 37, there's potential for a rebound. Fibonacci retracement levels also indicate a wide range of price targets, offering both growth potential and downside risks depending on market conditions. Currently priced at $438, SMCI has several price targets for 2024 based on these levels. The average target of $655 suggests moderate growth, while the optimistic target of $822 indicates substantial upside if market conditions are favorable. Conversely, the pessimistic target of $410 implies moderate downside risk. Moreover, Supermicro's financial performance continues to show promise. The company's revenue for fiscal 2024 skyrocketed to $14.94 billion, a 110% increase from the previous year. This growth is driven by high demand in the AI infrastructure sector, particularly generative AI technologies. The company expects this momentum to continue, projecting Q1 2025 revenue between $6 billion and $7 billion and fiscal 2025 revenue between $26 billion and $30 billion. Supermicro's revenue comes from key segments like OEM appliance and large data center, which brought in $3.41 billion in Q4 2024. This segment alone grew 192% year-over-year and 76% quarter-over-quarter. The enterprise channel vertical segment also showed strong performance, despite competition, growing 87% year-over-year. Geographically, Supermicro is experiencing dynamic growth with minimal US-China risk. Revenue from the US made up 61% of total Q4 revenue, marking a 94% increase year-over-year. The Asian market also showed impressive growth, with revenue increasing by 437% year-over-year. Europe and the rest of the world segments contributed to this growth, reflecting the company's expanding international reach. Despite the impressive revenue growth, Hindenburg Research's report on accounting irregularities and related party transactions raises valid concerns. Over the past 3 years, nearly $1 billion in transactions involved related parties like Abelcom and Compuware, companies linked to Supermicro's CEO and family. These transactions can obscure the company's true financial health and raise questions about conflicts of interest and fair pricing. In conclusion, while Supermicro's top-line revenue growth is impressive, there are significant red flags regarding financial transparency and governance. However, the recent price drop might present an attractive entry point for long-term investors with a high risk tolerance. It's essential to stay vigilant and continuously monitor the company's fundamentals and technicals to navigate potential market shifts. Thanks for watching. If you found this analysis compelling, don't forget to hit the like button and subscribe to our channel for more in-depth financial insights. Now, let's dive into our bonus topic. Here's something intriguing. Did you know that Supermicro's relationship with Ablecom and CompuWare is quite unique? Supermicro supplies components to these companies, which then assemble and sell the completed products back to Supermicro. This circular relationship raises questions about outsourcing practices and the true independence of these entities. Limited financial data for Ablecom and CompuWare complicates any fair value assessment, suggesting they may function more as extensions of Supermicro rather than independent entities. This unusual setup highlights the complexities of corporate relationships and governance, making it even more crucial for investors to dig deep into the company's operations. Understanding these dynamics can provide a clearer picture of the company's financial health and potential risks. That's all for today. We hope you enjoyed this deep dive into Supermicro Computer and its potential rebound. Don't forget to like, share, and subscribe for more insightful content. Let us know your thoughts on SMCI in the comments below. Until next time, happy investing.